All right. So tonight we are breaking down SMT reversals. We're not gonna really just so much be talking about like just where they are, but what makes them valid, what invalidates them, and how to trade them with higher probability trades and execution. Then we're gonna go ahead and talk about something that a lot of us struggle with, like me myself. I struggle with too. So that is going to be more about how we handle trending price action. Okay, when we're seeing a strong buy off or a strong sell off, strictly these are going to be concepts of the institutional flow model. And if this is some, you know, this should be something that you can relate to as well with whatever strategy really that you use, because it's all market structure um, and price action. So something that I really wanted to point out about SMT, okay? It's important of how we actually use SMT, right? SMT doesn't just give us entries. It gives us our directional bias, whether there is continuation, whether there is a reversal. It's going to help us a lot when it comes down to being able to spot that directional bias. If we're seeing a higher probability SMT and it's bullish, price structure is bullish, we're following a trend. And if it's bearish and we get in SMT, we're following that trend, especially if it's higher probability, because we're expecting that SMT to hold price in the direction that we're rejecting, especially if we are hitting areas of our higher time frame draws on liquidity, and it is aligning, those standard deviation projections are aligning with our projections in higher, equal highs and stuff like that. Again, like I said, our forms of PDRA in the opposing liquidity targets. So again, this alone will, definitely help us a lot. Just some basic SMT, okay? The only time a SMT is really put in, of course, is when liquidity is being taken. So if you kind of look back at Friday, this was Friday the 10th, right? Again, market opened up. We put in a big new week opening gap, and there was a SMT at these lows. This honestly was a significant low. This was the first low that we put in for the weekly open, for the beginning of the week, right? And so another thing when we talk about correlation, for many of you who don't know about correlated markets, right? We have NASDAQ that correlates with the asset S&P 500, the ES. NASDAQ can also correlate with Dow. And as far as gold, I've learned that that correlates with the dollar, right? Which makes sense. I was thinking for a minute that it correlated with silver, but it actually correlates with the dollar. So that's something that I'm going to be paying a lot more attention to soon too. Um, so yeah, SMT is all about correlation and liquidity swooping. Okay. So going a little bit more back to what we were talking about. Okay, some type of form of liquidity is being taken, whether whether it's NQ or ES, right? If our markets are correlating, that's okay. We still can see that SMT, because when we have a SMT, we have a projection, right? After a form of liquidity is being taken, and you are able to spot out the SMT divergence between the two correlated assets, right? You want to be spotting some type of form of liquidity, because if we look at, if like I said, if we go back to um, the weekly open here, right? Price kind of technically really wasn't on too much of a trend here in this area. Um, but again, when we kind of look down here further, there is still lots of inefficiency left here, right? The inefficiency that we came back to even grab and play around at before market decide to take its route to the upside. So we want to always see displacement and inefficiency, some type of inefficiency. Our forms that we use according to the institutional flow model are, again, our breaker blocks, our fair value gaps, volume imbalances, and things like that of that nature, right? So after that displacement, and after that inefficiency, that's then where again we have our projection at that SMT, and then we see it hopefully that gives even higher probability. We see it aligning with previous power of threes, and like I said again, those previous session highs and lows, right? Now, when we talk about how when we get into reversals, right, the best form of reversal that we can really see is when we've taken high of day, low of day. And if you notice, a lot of these reversals they happen during London session, and New York Open, New York AM Open. So a strong reversal definitely comes from when the trend has switched, just like in the example here. Um, you can see a strong reversal with this SMT here. Now, not every SMT gives a reversal, because of course the SMT can once be valid. Say if NQ makes a high, ES doesn't take it, but then it soon comes up to actually take it. That's invalidation. But a reversal, but a SMT with a reversal becomes strong when we've drawn off of some type of um, area of a key level, just like in this trade here, which was Monday, right? We came into this 5-minute order block. You see, if we go to the 5-minute here, right, and we formed the SMT here, right? Not only does this SMT shows us that price is bullish, but our PDRA that is in alignment with our trade direction, the current overall market structure, right, of our higher highs and our higher lows, gives us even more confluence and higher probability. Okay, so again, in this trade, that's kind of where, my bad, let me get my charts back, right? Goodness gracious. Okay. Again, this is kind of where higher probability reversals set into here, right? We always talk about wanting to have at least two to three or more confluences. So in this case here, liquidity sweep SMT 5-minute order block. Not only that, we have a inverse of this 1-minute gap. That is our inefficiency. That's higher probability reversal. Even though this is on the 1-minute time frame, you still can see the clear sell model and buy model to the upside, right? Not only that, if I was to still put in our standard deviation projection from this first displacement right here, that first low, right, it kind of gives us the outlook, the projection for how everything went. Not only that, it aligns with past standard deviations. I mean, past standard, past power of three, right? Look how it aligns with these highs to the left. Look how everything aligns, right? So that's another form of high probability. When we can project and those standard deviations align with, again, I can't say it, I can say it over and over, when they align with previous highs and lows, equal lows, session highs and lows, and all of that stuff, higher probability as well. So again, like I said, this is the basic model. Okay, drawing liquidity, SMT, standard deviation projection. Boom. It's clear that you can see the accumulation, the manipulation that we had under this low up into this order block, and then we had our expansion. It is played over and over in the markets this whole entire week. So yeah. Another thing that I really wanted to talk about, which is kind of what we said in the beginning, what invalidates a SMT? This is one of the most important ones, because I took a trade today that kind of shows how my SMT was invalidated. For one, our SMTs can be invalidated when we're using the wrong SMT for the structure. And what I mean is, today we were in a whole bullish structure and I was using bearish SMTs, right? That goes back to saying the trend is your friend until it's over, or follow the trend is your friend, follow the trend, whatever, however they say it. But so this is kind of how I went into this morning. um we were still above midnight and all of that. We hadn't even reached the yearly open yet. So again, y'all know what I've been talking about this whole week, us reaching this yearly projection. Okay, so this is kind of how this trade worked out this morning. I was noticing that the 1 hour was getting weaker, which was not really a confluence for me to really go off of. But there was a SMT put in here with ES. There was an SMT put into here. And later, after taking the trade and reviewing with everybody, it came to me so much clearer as to why I should have never been on this side of buys. And I'm gonna turn my execution on here really quickly, just so I can make sure I remember where exactly I was in it. Okay, yeah. So we were right here, right? So first, the way I looked at it is, like I said, the 1 hour was getting weaker. We put an SMT in here. And I had, before I even thought of taking loans, I had already was seeing this 5 minute demand zone. I mean, it's perfect if I go to the 5 minute. So I told myself, instead of catching loans back to this 5 minute demand zone, right? I wanted to see, okay, we tapped into this demand zone. I'm still stuck on and believing that just because I see this SMT, price is gonna come lower. For one, we're in the middle of nowhere with this SMT. It wasn't, I was paying attention to price coming back up to this 1 minute fair value gap. But I want y'all to notice how I always say, again, a higher probability trade is when we have a drawn liquidity of a higher time frame PRA, something in that area, right? So it was low probability. It wasn't enough confluences there for me. Not only that, I wasn't following the trend. The better way of thinking would have been, take this continuation back off this 5 minute demand zone to the upside, right? One of the members today actually spotted out a 1 hour open of the 10 o'clock candle, I think. And so this is kind of how we got this is kind of how it would look. This 10 o'clock 1 hour open. The way we manipulated these lows, a projection. This was better. This would have been better. Not only that, let me see, we put in this gap here, displacement. That's the displacement that we always talk about from an inefficiency. So we had that inefficiency, we had the displacement. Not only that, we had a CISD, right? So structure definitely shifted. And so that's another thing too when we talk about what invalidates a SMT, right? If price didn't really take some form of liquidity, SMT means nothing. So we always want to look at it in cases of no liquidity sweep, no reason for a reversal. In other terms, no higher time frame drawn liquidity, no reason to target opposing liquidity. Simple. Okay? Yeah, I mean, it's that simple. So, and then another thing that I always think to myself too, these candles might have looked like they were moving really fast, but another thing that I've taken into account, this wasn't really an aggressive move to the downside, just because we knew we still had a 5 minute demand zone holding up. So the more bullish structure, the more bullish that structure is, we can expect, don't put too much expectation on it, but we can definitely be looking forward to our bullish PRAs being respected, as in us inverse and bearish fair value gaps. Demand zone, look at this demand zone here. Every time today we came into a demand zone, price bounced back up every time. And this even did it all even last week. Price came into demand zones, bounce back up, demand zone tap, bounce back up. You know what I'm saying? So it's been happening over and over in the market. We haven't had anything significant that is showing us price really wants to come down. And still, I told myself I'm paying attention to that weekly candle. That weekly candle again open low, so I want to see a close high of it. So that's kind of where we can think smarter of a SMT being invalidated. Okay, we don't want to just really be placing that SMT just anywhere in the market. We want it to be at high probability confirmation zones. But so the way we kind of turned this day around today, right? This is our projection, -4. I said, okay, we kind of came short of -4. I'm not sure if we put an SMT in here or not. I don't really think so. But I played this off of just a pullback of correction to get us back on the right track. Price is still bullish. Um, this here could have been shown. A lot of us were confused in this area because it's like, dang, we can take shorts from here. But if I just want to say one thing, if we kind of just look on the 5 minute again, just like I was talking about in this trade, we are more prepared for, and we are more prepared and more focused on our PDRAs wanting to be respected. Again, back to our 5 minute, our demand zones, inverses and all that stuff. So when you look at it that way, you're able to see things a lot different. And sometimes it is harder because these candles playing out in real time, we able to look back now and be like, dang, I had so many wild moments today. But yeah, we came into this 1 minute demand. Not only that, I wanted to see the range of this whole bullish leg here. I wanted to see the whole range of this. So equilibrium, okay, of this whole range and 1 minute demand. This 1 minute demand that we bounced off of, and then we inverse this 1 minute gap. Okay, so we got our drawn liquidity, okay, our inverse fair value gap, CISD, expansion, literally. So another time that takes a good play on SMT as well. I think I mentioned it already previously before. It's true. SMT have specific, I wouldn't say like specific times, but you'll see it show more when it comes down to like reversals or just strong price action where it's really going in one direction. Like I said, London Open, we're able to catch those reversals. New York Open and Power Hour. Okay, so and then like this was, I want to say, I wanted to spot another SMT that was kind of not a good one. Price has just been all over the markets. Trying to keep my executions up. I know I had another one in here somewhere. I lost track of the other one. My bad, y'all. But worst SMT times, again, midday chop, just like in certain areas, just like that one trade that I shown here. It was midday chop, kind of a little bit around in that area. Price was chopping, and of course low volume periods, right? So when we see in that SMT, we want to see displacement for real. We want to see a true reversal or a true continuation. So we've kind of already covered, what makes SMT higher probability and low probability, what invalidates. And the last one that I wanted to touch base on is handling trending price action. So again, just like I was talking about in the trend, we want our SMT to be our confirmation, okay, not our continuation. So like I said, in most, when we're bullish, just like we've been bullish this whole entire time, we've been held up by a SMT at these lows. We've been held up by this very SMT at this lows, and we never came back under it. Right? Higher probability here. Okay. And not only that, throughout this bullish structure, we've been seeing bullish SMTs. One here for the week. I'm sure there's a lot more. One here and up in here, this area. So that's what's been holding us up. Again, we know our trend. Okay, uptrend, higher highs, higher lows. And then our downtrend, lower lows, lower highs. Right. So in trending markets, again, when I go back to a bullish structure, bullish PRAs, we're respecting we're respecting fair value gaps. We're continuing in our direction of flow, and not deep pullbacks. Today we didn't really have like any major like deep pullbacks for real. I would say, and so that's another thing that's kind of been given off this bullish structure for real. Like y'all, this pullback, them pullbacks right there, it's not nothing for real. Although it's probably been like a quick scalp, and that's something that we were talking about early too. But we always want to start the day off again by identifying the trend. Okay, is it bullish or is it bearish? Right. Another thing, as far as continuation when following that trend, right? We're waiting for pullbacks into confirmation zones, not just pullbacks to take a low again. Those pullbacks into our PDRAs, as far as fair value gaps, order blocks, and mitigation zones, are where we want to see us pull back into. Just like a lot of my trades have been pulled back into breakers, they've been pulled back into 5-minute order blocks, 1-minute inverse fair value gaps, areas of inefficiency. So yeah, another thing too, with these trends, we're targeting new highs and new lows to be made, right? Again, and that's where we talk about kind of like where there's liquidity lying above every high and every low, right? So most thing that we really want to learn from today, right, is we not fighting the trends, okay? And I know for me, that's where a lot of my mistakes happen from fighting the trend. Sometimes I'm always just trying to keep my eye on a reversal, when whole time this is a lot to miss on by trying to take shorts. This is a lot. I was that weekly candle is almost 1,000 points this week, so price has been very, very overly bullish. So it's I'm not really gonna try to be catching tops and bottoms. You know what I'm saying? I'm giving what the market is presenting, and I need those 2 or 3 confluences, and we going from there.